triple dip, but it's hardly good news. The economy is still essentially flat on its back.
Yeah, it's flat on its back, but when you compare it to Europe, it's probably, I think it's all about preconceptions, Jamie, and I think there's been a lot of people who've been very, very sort of downbeat on the UK economy. There's an awful lot of short positions out there in the cable market, in the sterling market, and you've got lots and lots of chatter about cable being down at 145 and 140. I think that's slightly overstated. We've also got talk about the FOMC next week. Talk of asset purchases being tapered off. I think that's very unlikely, and as a result, I think the pound could benefit from that.
The bond market reaction hasn't been as dramatic as the FX market reaction. You think yields are going to back up slightly, but if the UK is seen as a safe haven from the Eurozone, surely money will flow into gilts and yields will come down.
That's probably true, but they're at pretty low levels already. I think the expectation that we're going to see further QE next week is highly unlikely. We've still got the three doves on the MPC, Fisher, King and Miles. I don't think that dynamic will change, given the fact that we've just seen this 0.3% rise in GDP. The services sector does look in pretty good shape. Having said that, I think the construction sector does appear to be showing signs of life. My biggest concern, I think, going forward is the services sector. A lot of tax changes in April could actually squeeze incomes further. Average earnings are still very, very low historically, 1%. And inflation is still very high. There is a silver lining to that. Oil prices coming down will shave quite a bit off input costs.